Becoming your own banker is the ultimate do-it-yourself project. It's in the name, becoming your own banker. Welcome to the Durham Talents channel. My name is Jesse Durham. Today's subject is going to be about infinite banking being the ultimate do-it-yourself project. It's literally in the name. It's the idea and the concept that you can become your own banker. Now, when I think about do-it-yourself, I think about the hands-on folks that are looking to make things their own, folks that are looking to maintain control of the outcomes and what have you, really put their flair on things. Well, everybody is doing whatever it is that everybody is doing. And when we think about we finance everything that we do. We finance whatever our lifestyle is, whatever our business is doing, whatever we're doing as investors for the investors out there. We finance everything that it is that we do one way or another. Either we're conventionally doing things with the commercial lenders and banks where on their terms and conditions, we borrow their money, pay them interest, we're beholden to them for the things that we want to do, whether that's the cars that are parked out in the driveway, the vacations that we take, the business equipment for our business, what have you. Or we systematically set aside capital, our money, for the things that we're going to buy, and we pay cash for those things. And in that scenario, we forfeit the opportunity to earn on our capital. We forfeit the opportunity to have economic value added, EVA, to our capital. So in either situation, we're financing whatever it is that we do. Well, in becoming your own banker, it's a do-it-yourself approach to personally financing your lifestyle such as it is. And again, in just thinking about what DIY, do-it-yourself, embodies, well, it's normally a way to save money. Normally, it's a way to lay hands to a task yourself, to do it your way, to control the outcome. It's a way to be independent in the things that you are doing. So here are some promptings that I just want to give to provoke thought about the spirit behind becoming your own banker, the spirit behind what it could look like privatizing the weddings that take place in your family. What if you could privately finance within your own family the weddings that take place? What if you could privately finance the vacations that you take as a family? And when I say family, I mean that could be as big or as nuclear as you want it to be. What if you could account for passive income, retirement income later in life? What if you could personally, privately finance that right now? What if business equipment were privately financed? What if you didn't have to submit 2 years of financials to the third-party lenders and the banks to be able to get the financing that you want for your business? What if you could account for taxes? And I'm not giving tax advice, but what I'm saying is taxes are financed one way or another. Taxes are financed as well. What if your real estate investments could be privately financed? What if you didn't have to work at the speed and to the scrutiny of anybody other than yourself? So I'm just trying to provide some thought here about what it could mean to DIY your banking. See, banking is a process. Banking is a function. It's not a product. But it's also true that there are entities that are better than others. Well, the best appreciating asset that self-collateralizes that I know of that has more than a dozen characteristics that we would look for in the ideal asset. And in fact, I've done a particular episode on the ideal asset and why it's properly structured whole life policies with mutual companies that pay dividends. More than a dozen characteristics are seen and displayed and are just inherent in these types of policies, let alone how we could use those types of policies ourselves, right? That's the theme here, is do it yourself, for accounting for our need of finance in all these different areas. I mean, what if we could account for our children's college, all of the investments that we make, our family's mortgages? I mean, I dare you to look up on your own or in any family members how many interest dollars are forever leaving your family's hands on the homes that you own. Okay? What if you could get that back? Again, in thinking of the spirit of what it means to DIY, to do it yourself, a lot of times you're just trying to make something your own. You're trying to control the income or the input rather, and the outcome of that situation, and you're trying to save money along the way. Well, if you're not afraid to capitalize, like Nash would say, and you would account for your need of finance, you could DIY your banking. You could privatize your banking to keep more money in your family, more money in your household, increase the margin of profit exponentially with any investing that you're doing, because now you're not financing with third parties, you're financing for yourself. All right, so let's take an example. Let's take an example right from Nelson's book. Nelson in his book, and I could look up the page number for you. It's where he's talking about the cogeneration that takes place at a paper mill. So wood's coming in, paper's being made, but one of the byproducts of that process are these wood chips. Now, the correlation that I'm going to make here is you're living life however it is that you're living life. You're earning and spending and doing things. Well, okay. So if you're the key actor in this play of life, and you are, and you're doing what you're doing with money, you're going about your business of pursuing a career, having a family, whatever your situation looks like, right? Well, there are certain byproducts along the way. And this process of banking, let's not overlook it. So the paper mill, going back to the paper mill, and then we'll get back to you. The paper mill has this byproduct of these wood chips. Now, instead of just discarding these wood chips or what have you, something beautiful happens with this byproduct. See, this paper mill has an immense need for electricity. And this byproduct, they're making paper, but this byproduct of the wood chips is a great tool to use for creating electricity. So because of the combustion of wood chips, that immense heat that is created, electricity can be generated even above and beyond the needs of that plant itself. So that paper mill can supply its own need of electricity by using this byproduct of the wood chips, burning that heat, but even beyond. Okay, so then the question is, well, if that paper mill is sufficing its own need of electricity simply by using that byproduct, what does it do with the extra? Okay, so if becoming your own banker is a lifelong pursuit of, okay, you first get, like my wife and I 7 years ago, got our first policy. We've added to a total of 6 policies now over the past 7 years. A system of policies that we own and control. We've been able to move beyond just personally financing our family vacations, paying off vehicles, paying off debt that we brought into our lives before learning about this idea of becoming your own banker. So paying off student loan debt, for example, that's something that we've done with policies. So you can get to a point where, again, whether it's someone else's vehicle in your family, whether it's a wedding, whether it's a vacation, whether it's a business opportunity, whether it's investment, whatever it happens to be, you can get to where not only are you accounting for your need of finance, but perhaps you want to be able to assimilate some larger, whether it's business or family, some other opportunities by expanding and just using what it is that you're already doing. So again, you earn however you earn. You deposit wherever it is you deposit. I don't know, but conventionally it's at the commercial banks. But again, once we start changing the location and direction and the utility of those deposits, once those become premium dollars, and again, over the course of our lifetime, Nash said that premiums should eventually equal our income, meaning that 100% of our income should eventually end up being premiums into policies that we own and control, wherein we deploy our capital for whatever our lifestyle happens to be. So again, over the course of our lifetime, he's talking about a system of policies that we own and control. And if you compare that to the commercial banks, aren't there commercial banks on every street corner in every town or city? Right. So they have multiple branches, and over the course of our lifetime of implementing this do-it-yourself project of becoming your own banker, we're going to be talking about a system of policies that we own and control. So just like the paper mill can use that seemingly inert byproduct of wood chips to create the electricity that the paper mill itself needs, but even beyond that, they can tap into the current system, okay, and sell their excess for profit, their excess electricity for profit. Again, just tapping into the distribution system that already exists. There's already a power grid, and they just tap into that with the electricity that they're generating above and beyond their own needs. Well, again, life insurance has been around for over 200 years. But we can tap into that whole system of there being mutual life insurance companies that have paid dividends for well over 100 years. And we can work with the appropriate professional. Hi, my name's Jesse Durham. To have properly structured policies that account for our need of finance. And again, not just one policy, but over the course of our lifetime, we build a system of policies that allow us to DIY our banking, to do it yourself when it comes to financing. Because again, everything is financed. Who do we want to be the banker in our scenario, whatever that happens to look like? Okay, is there a way for us to just change one thing about what it is that we're already doing, just like with that process at the paper mill? Just change one thing. Instead of throwing the wood chips to the side and discarding those or what have you, using those to create the electricity needed to run the whole thing and more. Okay, well, what if we change the destination, location, use of deposits that we're making into conventional banks? What if we started making deposits into assets that we privately owned and controlled, wherein we could compound our dollars, our money, by making premium payments, but also wherein we could leverage that asset via policy loans to account for our need of finance and pick anything. I've been talking with people just this past week, and I would tell them, I'm thinking of a particular conversation, and I would say, it's like, I'm not here to tell you what to do with your policy. I understand that plenty of folks say, well, this makes sense. I want to have one of these. They get one, and then they want to, well, what do I do with it now? It's like, become your own banker. What is it that you're already doing that this is just going to add more fuel to the fire? See what I did there? Bit of a pun, bit of a play on words in the scenario that I've laid out. You're welcome. Dad jokes, right? So whatever it is that you're already doing, Nash said in his book, he said, be in the business of financing whatever that is. Be in the business of financing whatever it is that you're already doing. If you're running a business, the bank is making a killing off of financing your business. What if you did both? What if you were running your business and you were in the business of financing your business? If you're a household, instead of being like the average American, paying 34.5 cents of every dollar in interest to third-party lenders, what if you kept that in your household? How much is that going to improve your standard of living? Okay. What if you could go on vacation and get the money back? What if you could buy a car for the family and get the money back? What if you could set aside funds for college and get the money back? I mean, it's the infinite banking concept. There's so many different scenarios to consider for sure. But what if, ultimately, this is the question, what if you DIY'd the banking function for you, your household, your business, your family, your investments? What if you made the ultimate do-it-yourself project out of becoming your own banker, right? So for the things that we're doing and going to do anyway, the jet skis, the travel ball, the pools we're building, airplanes we're buying, motorcycles, campers, homeschool, private school, charter school, musical instruments for the children, real estate deals, business equipment, taxes, weddings, living expenses, whatever your financial footprint looks like. What if you made a DIY project out of becoming your own banker? And here's why I thought that becoming your own banker, it just has to be the ultimate do-it-yourself project, right? Because it starts with you educating yourself. See, it's the open-minded people that are open to learning about bettering their financial standing anyway, that want, the next generation to have a better starting point than they themselves did. And they're open to reading a book, or they're open to watching an hour-long presentation, or they're open to subscribing to a channel where, on a regular basis, they're learning about a process that can better their situation. It's those kinds of folks that are willing to ask questions, folks that are willing to line up a phone call or to send an email to get their specific questions answered because they're paying attention. They're open to learning and improving. See, to get started in this concept too, I've been on the phone earlier today. People that are interested in becoming their own banker, they're going to vet this concept itself. They want to know more about these mutual life insurance companies. They want to know more about the process of banking. They want to know more about the professional that they want to choose to work with and to learn from. And see, that's a big part of why, on our channel, on our podcast, I put my best practices out there, because my opinion is what I've adopted from R. Nelson Nash, which is that when you know what's going on, you'll know what to do. And my feeling is that when folks have been, encouraged and have learned from a source, that's who they want to work with. That's who they want mentoring them. That's who they want coaching them. That's who they want to do business with. That's who they want to interact with. And if we're connecting with you, and I appreciate everyone that I hear from, all of our clients, all the folks that I talk to and answering questions and have interviews with and make presentations to answer questions and help propel on your journey of becoming your own banker. You get to choose your professional. That's a big part of why this is, do it yourself. And I'm not looking to make folks dependent upon me. I wanted 7 years ago, as soon as I heard the phrase become your own banker, I wanted to be my own banker. And I didn't have all my questions answered, but I knew enough to know that I wanted to become my own banker. So I'm here to encourage folks along that path. Now, we can have, about as close of a relationship as you would like to have. I am here to mentor and to coach and to encourage folks on their journey, but on their journey of becoming their own banker. Not me becoming their banker, you becoming your own banker, just like I wanted to become my own banker 7 years ago. And then when you have a policy and you have a mentor, see, it's you that can call the insurance company to make your premium payments. It's you that can call when you're wanting to make a policy loan for something it is that you're wanting to do. And when you do that, it's the impetus is on you to know, when you want to pay that back, how you want to pay that back, what interests, to charge yourself above and beyond what the insurance company is going to say. How do you want to value your money? You get to decide that. You get to decide the whens and the hows and even the ifs. And I'm here to encourage you to become your own banker and to be an honest banker in this process. Once you recognize whose bank it is, it's yours. This, do it yourself. This is you building up your privatized banking system. Are you going to want to pay that back plus interest plus profits? Absolutely. Whose bank do you want that to go back into? yours, no question. But it's you who gets to understand your contract and use it how you see fit as the banker. And then when you realize that there needs to be a natural expansion to your system, it's you who decides when that is appropriate. Not me, not anybody else. There should be a natural progression towards expanding a system of policies that allow you to account for, 100% of your income, 100% of your need of finance, 100% of what it is that you are doing and want to grow and scale out to do. Whether that's getting the snakes and dragons out of your life, to use Nelson's phraseology there, talking about the conventional lending system. Get the snakes and the dragons out of your life. Me, I felt that way when, paying off student loan debt. I mean, I just went to college and racked up student loan debt just because I thought that's what you were supposed to do. Go to college, pursue a career or whatever. And that's if you can get a career in the field wherein you study. But that's its own subject. And in fact, I've done an episode on college. And Nash has a section in his book on college. So I'd encourage you to read that. But again, if it's you getting the snakes and dragons out of your life, that's part of your do-it-yourself project, because you can get the third-party lenders out of your life. You can become your own banker. And furthermore, you can establish whatever kind of legacy that you want to be able to establish for future generations, for your beneficiaries, for the nonprofits or churches or other organizations that you care about. See, by taking it upon yourself, this project of becoming your own banker, how far that reaches and impacts, who knows? Who knows? Again, Nash would say, think long range. Well, how long range can you think? You can start this project today, wherever you're at right now. If you're already a client, I appreciate you. Thank you for tuning in. I look forward to us continuing to work together. If you're vetting this idea of becoming your own banker, you can start right where you're at. You can go out and pay $20 whatever for Nash's book and read from the origin source about how to become your own banker. Of course, subscribing here, listening here, learning here. I'm putting my best practices out at no charge because I'm a big believer in this sowing and reaping. I put the best practices that I can out there. All the gleanings from our 7 years experience as consumers. And then, of course, in addition, the past couple of years of being a professional in this space of coaching and mentoring and writing business contracts for folks that want to become their own bankers, writing these types of policies. It's been quite a marvel. But you ultimately, what I'm saying is, get to decide the impact that you're going to have. And if you're learning about that here and you're enjoying that here, then I encourage you, carry on. Don't look left or right. Carry on. Be about the business of this do-it-yourself project of becoming your own banker. And if there are other folks in your lives that are going to benefit from this information, then I encourage you to share it with them. So if you would like to know how to implement this idea into your household or your business or your investing, you can reach us at 828-817-4223, or you can email durhamtalents@gmail.com for a free consultation. I look forward to our next conversation. Have a great day. Take care. My voice is done. My goodness, we're coming up on 2 years of being on YouTube and podcasting. Has been fantastic. It's been fantastic. What a learning experience this has been for me. Appreciate everybody that's participated at whatever level. You're expecting bloopers right now. I'm so tired. I'm hungry. I'm tired. And the coffee is about gone. That definitely means we're about to wrap up any recording when the coffee is about gone.